So welcome back. Next in the unit of public policy, next topic is budget. So budget, all of us know budget is very relevant. It's one of the most relevant topic from exam perspective. So budget I want to cover in detail. First we will discuss few definitions, the definition of budget and all these things, the basic concepts related to budgets. Then we will discuss how the budget is passed, how the budget making process, when the budget making process starts, and finally how it is passed, which all constitutional articles that are related to this. Then we'll discuss few other part of polity that is common among polity and economics. What is finance bill versus money bill, and what is the difference between vote on account and interim budget, and how the consolidated fund of India is different from public account fund of India. So first I will start with the definition of budget. So budget which is being tabled, for example, on 29th of February 2016 in the Parliament, the applicability of this budget will be from 1st of April 2016 to 31st of March 2017. So it is an advanced planning. Under budget, what you are doing is an advanced planning. So budget we can say is an financial planning or the advanced planning of the receipts as well as the expenditure of the government for the forthcoming year or for the next year. In other words, the budget can also be defined, it is the financial planning of the forthcoming year or the next year. So this is what is the definition of the budget is. So this budget which was tabled on 29th Feb 2016, the applicability will be 1st April 2016 to 31st of March 2017. Suppose in this budget, the Ministry of Finance allocated some funds to Defence Ministry, and if that Defence Ministry is not able to use the funds by 31st of March 2007, all of the remaining funds will be lapsed. It means they cannot carry forward the remaining funds. So these type of funds, these are known as lapsable funds. But the government sometimes they create non-lapsable fund. If it is for a specific purpose, for example, you have to make national highways. So suppose you allocated some funds for the national highways, but due to some reason, suppose you have done, there is some judicial intervention in that land acquisition or something, or because of that you were not able to construct that particular national highway. So as per the normal lapsable fund concept, it will be automatically lapsed. But we have a road act, central road act, under which they have created a central road fund. Under that central road fund, you can make national highways, and if you are not able to use the funds for this financial year, that will be automatically carry forward for the next financial year. Similarly, the government has created a non-lapsable fund for the development of northeastern states. So whatever the ministry, all these ministries are getting some funds, Ministry of Rural Development, this Ministry of Defence, Home Ministry. So some amount of their outlay automatically goes to that particular fund, and that is being used for the development of northeastern states. So this is what the definition of the budget. That budget is nothing but the annual financial planning or the estimation of receipts and expenditure of the next financial year. So this is what we have budget. So in which constitutional article it is mentioned? So nowhere in the constitution the word budget has been used. The word that is being used in place of budget is annual financial statement. So annual financial statement is mentioned in article 112 for union government, and for the state government article is 202. So as per article 112, it is the duty of the president to lay down budget in front of the Parliament. So this is what we have, annual financial statement, rather than the word budget that is being mentioned in the constitution, and the constitution article is 112. Then we will discuss few other constitutional provisions which are related to the budget. So the next article, so we have already discussed 1110. So 1110 is nothing but which is related to money bill. We'll discuss it when we will compare finance bill versus money bill. Article 112, which is related to this, is nothing but annual financial statement. Then we have Article 113. This is demand for grants. For example, I'm Ministry of Rural Development and you are Finance Ministry. So who gives money to these different ministries? It is the duty of Ministry of Finance to allocate different funds to these spending ministries that we have. So suppose this is Ministry of Finance. So Ministry of Finance has to give these funds, but Ministry of Finance don't know how much fund is required by this Defense Ministry, how much fund is required for border management, how much fund is required for this ocean management. So different funds are being used. That is why we have specific ministries for specific purpose, because they have expertise. If suppose Ministry of Rural Development wants to come up with a new scheme, so MORD must be having more knowledge or specific knowledge in comparison to Ministry of Finance. So what Ministry of Rural Development will do? Ministry of Rural Development is going to give an application on which it is written, I want to start this programs. I have already started these programs and I need this much amount of money for next financial year. So this piece of paper is known as demand for grants. It means you are demanding the grants. Now the question comes, why the word grants is being used? The difference between grants and loan is you have to return the amount of loan, but in case of grants you don't have to return anything. It means this Ministry of Rural Development is going to use whatever money is being allocated by Ministry of Finance for that financial year. So Ministry of Rural Development or any spending ministry, all these ministries are known as spending ministries. So these spending ministries, they will not return anything to Ministry of Finance. That is why they are regarded as grants. So Article 113 is related to demand for grants. Then we have Article 114, which is related to appropriation bill. Now, if suppose this is Government of India, so Government of India is receiving something, getting the receipts, and it is related to the expenditure part, that is related to receipts part. So appropriation bill is related to the expenditure part. So expenditure part is going to constitute what? It is going to constitute this demand for grants only. So this is what we have. The demand for grants is related to appropriation bill. In detail we'll discuss, while we are going to discuss all this, how budget is being formulated. Then we have 115. 115 is nothing but we have other types of grants, supplementary grants, excess grants. These grants are like, suppose for MG Narega, Ministry of Finance has allocated 40,000 crore because we are doing an advanced planning, and suppose after 8 months or 9 months Ministry of Rural Development has realized that I want extra 10,000 crore. So these extra 10,000 crore grants being given by Ministry of Finance, such type of grants are known as supplementary grants, excess grants, and different things. Then we have 116. 116 is nothing but vote on account. So vote on account is nothing but, just for the introduction purpose, because this budget is being passed. When the finance bill is passed, we say the budget is passed. It is being done by May 2016. But we have already seen that the financial year 16-17 is going to start from 1st of April 2016. So from where the government is getting this expenditure? Because just on 1st April 2016, whatever expenditure government has to do, it should take permission from Parliament. But budget is not yet passed, and unless and until budget is passed, you cannot take even 1 rupee out of the consolidated fund of India. What is the solution? The solution is take an advance permission of the Parliament. So when this budget is being tabled in the February, you take an advance permission of next 60 days. 60 days in the sense April 30 days, and May 30 days, roughly 60 days advance permission you are taking of the Parliament that for next 60 days till the budget will be passed we want to use this much amount of money, and that is known as vote on account, and that is what Article 116. Then we have Article 117 that is related to finance bill. Now there is a difference between finance bill and money bill, Article 110, 117, and all these things we'll discuss once we will cover the budget making process. So the budget making process, it starts from this. I am discussing for budget 2016-17. It means that will be applicable from 1st April 2016 to 31st of March 2017. This budget will be applicable for this duration. So the budget making process for the budget 16-17 is going to start from September 2015. In September 2015, because we already discussed that these Ministry of Finance don't have the expertise that these spending ministries need how much amount of money, what should be the outlay of this schemes and that scheme, because Ministry of Finance don't have the expertise. So Ministry of Finance will issue an guidelines to the spending ministries, under which it is written that last year I gave you this much amount of money, please give me the revised estimate, because that budget was passed in May 2015 and that was applicable from 1st April 2015. So April, May, June, July, August and September. So they will ask, of the 6 months has already been passed, so you give me the revised estimate, because earlier that budget was passed as per the budget estimate, because budget is the advanced planning, and now almost 6 months of the financial year has already been passed. So now the finance ministry will ask the revised estimate of 2015 and 16. First this information will be asked from the spending ministry, and once this information, along with this information, they will ask the budget estimate of this financial year 2016 and 17. So the advanced planning is going to take place. Now in what format you have to give the information, that is being decided by CGA, Comptroller General of Accounts. It is different from CAG. CAG is the auditor which is doing the audit. Once the expenditure has been done, then they will do the audit. And Comptroller General of Accounts, it suggests to the government how to maintain the accounts, in the sense, first column should be serial number, then there should be item, then there should be remarks, and then there should be date. In what pattern you have to give this demand for grants, in what format you should maintain your accounts, the total government accounts, it is being suggested by Comptroller General of Accounts, and this CGA is different from CAG. In detail, these topics must have covered in polity classes. So in the month of September, the spending ministries, they are getting the guidelines from Ministry of Finance. Within this 2 or 3 months, by December, these ministries, they will plan and they will present their demand for grants to Ministry of Finance. It's not that we have roughly 54-55 ministries, but that does not mean we have 54-55 demand for grants. We have the number of demand for grants is 103 plus 6 plus 32. That makes it 141. So we have total 141 demand for grants, and we have 54 or 55 ministries. It means one ministry can have more than one demand for grants. This thing I want to highlight, that one ministry can have more than one demand for grants. Then this 103 is the general demand for grants. The 6 is related to defense. 32 is related to railway budget. Since 1921, railway budget has been separated from the general budget, and this railway budget was started on the recommendations of the Eckworth Committee. So it was started in 1921. Now the question is, one small question, when Gandhi became the president of Indian National Congress? Only once Gandhi became the president. Anyways, back to economics. So there are total 141 demand for grants. It means we can have more than one demand for grants for one ministry. So once Ministry of Finance got this whole demand for grants, they have to accumulate it, they have to combine all this demand for grants. Accordingly, they have to calculate the budget, they have to calculate the total amount of expenditure which are being required by these different ministries. It's not like if this ministry of rural development is asking some 10 lakh crore and Ministry of Finance is going to give 10 lakh crore to Ministry of Rural Development. So Ministry of Finance will do the cost benefit analysis, the different requirements, they will prioritize it as per the political directions given by the ministers. So accordingly, they will accumulate the demand for grants, and by the second week of February, the budget process is being done, or the budget making is being done. The background of the budget making is being done. The policies, which all policies will be there in budget, is being decided. Only very minute changes can be done after second week of Feb, and that's too by the direct intervention of finance minister. Otherwise, once this budget is finished, then you have to print the different copies of budget, and that will be done at the basement of the north block. So from second week of Feb to 29th of Feb, or the last working day of the February, in the north block, in the basement of the north block, almost 150 people, they have to stay there only from second week to 28th or 29th of Feb, without any internet connection, without any mobile connection, because budget is a confidential document. If suppose next year the government wants to come up with some policy, so that will be decided in the budget only, and if suppose that information leaks out, so that may cause some problem, share market collapse, companies can make some changes and all. So because it is a confidential document, so once this budget process is complete, afterwards roughly 150 people, they have to live in the basement of the north block for almost 15 or 17 days. And then this budget will get the recommendation of president. So budget is a money bill, and for money bill, or for the finance bill, the president recommendations is must. So once the president recommendations come as per article 117, a day will be decided by the president, but that is conventionally after 1998, it is the last working day of February. So the budget is tabled at 11 o'clock. The budget is tabled only in the Lok Sabha. Budget cannot be tabled in Rajya Sabha. Why not? Because budget is a money bill, and money bill cannot be tabled in Rajya Sabha. It can only be tabled in Lok Sabha. So when budget is tabled in Lok Sabha in the form of budget speech, so finance minister gives a speech under which the finance minister gives the policies. This is the policy related to health, this is the policy related to agriculture, this is the policy related to social sector. So finance minister gives the speech. So along with this budget speech, two more things are being tabled. This you have to remember. Finance bill is being tabled. Just like appropriation bill is related to the expenditure part, finance bill is related to the receipt part. Government levies some type of taxes and all. So this taxes related provisions are mentioned in this finance bill. So finance bill is related to the receipt part, appropriation bill is related to the expenditure part. Along with this finance bill, this vote on account is also tabled. Vote on account, we discussed that vote on account is roughly of 60 days, because this budget making process can cross the limit of 1st April 2016, and after 1st April 2016, this executive or the government cannot use even 1 rupee without taking the permission of Parliament. So the solution is take an advance permission of the budget of the Parliament. So that is how this vote on account is being tabled in the Parliament. And but there cannot be any discussion on that particular day. So no discussion takes place in Lok Sabha when the budget speech is being tabled. And once it is being tabled in Lok Sabha, then it is laid before Rajya Sabha. And we know in case of this money bill, Rajya Sabha don't have much power. They can only discuss it. They cannot vote. Even if they want to amend something in the budget, they can only give the recommendations, and that too within 14 days. If the Lok Sabha agrees to amend or to make changes as per the recommendations of the Rajya Sabha, it is their wish. If they don't want to amend, still it is the Lok Sabha only that decides the final fate of amendment of money bill. On the very same day, the budget is laid before Rajya Sabha, but in Rajya Sabha there can only be a general discussion. The general discussion on the first day is not takes place at here. Then the voting is going to take place. No voting takes place in Rajya Sabha because on money bill Rajya Sabha don't have any power. And for the next 2-3 days, the discussion is going to take place in the Lok Sabha. The next 2-3 days discussion will take place. But that discussion is not a detailed discussion. That is a normal discussion which takes place. Then the parliament is adjourned, or we can say the parliament goes to recess. Maybe for 1 month or maybe for as per decided by the president. Then the departmental standing committees. Then the budget goes to this departmental standing committees. This departmental standing committee system we started from 93 and 94. Under this system, we have 24 departmental standing committees. And what is the role of this departmental standing committee? They have total 45 members. 30 from Lok Sabha and 15 from Rajya Sabha. So these 45 members, they discuss, because in case of parliament, the parliamentarians, they don't have much time, they don't have much expertise. So we have created this system of departmental standing committee. So to scrutinize the budget, the parliament allows some time to this, allocates some time to departmental standing committee. That is having the members of parliament only. So from 93-94 we started this thing. So more than one ministry, the work of more than one ministry can be discussed in one departmental standing committee, because we have only 24 departmental standing committee. For example, we have a separate ministry for power and we have a separate ministry for renewable energy. But we have a common departmental standing committee for all the power ministry. In this departmental standing committee, can there be a discussion on this budget? Option is yes. That is what the role of the departmental standing committee. Can they vote? So the answer is no. Nobody can vote on money bill except the Lok Sabha. So voting cannot be done in departmental standing committees. Then can they put any cut motions against these departmental standing committees? So cut motions might be have already discussed in under polity, but there can be 3 types of cut motions. There can be policy cut, there can be economic cut, and there can be token cut. Cut motions is nothing but it is just the opposition which shows or which want to show that I don't agree with the present policies of the government, or I don't agree with this particular budget. So they put forward this cut motions. Now 3 types of cut motions are there. First one is policy cut. Under policy cut, the opposition will say that whatever scheme the government wants to pass, make the outlay of this scheme as ₹1. Or in other words, what we can say, it is a scrapped policy. You should not have such policy. So the money allocated by the government to this scheme should be ₹1 only. That is known as policy cut. Of course, that is just a symbolic thing, because if cut motions are passed, the government has to resign. But it is just a symbolic thing. You just want to show the opposition, or the opposition just want to show that we don't agree with the policies of the government. Next, second one we have is the economic cut. Economic cut means decrease by a certain amount. You want to decrease maybe by 1,000, maybe by 10,000, 1 lakh, 5 lakh, whatever the desired amount is, you should decrease the outlay of that scheme by this much amount. That is known as economic cut. For example, if the outlay of Swachh Bharat Abhiyan is this much and the opposition is saying this is very high outlay which you have allocated, decrease it by maybe 50,000 crore, 40,000 crore, whatever the amount is. Then we have the token cut. Token cut is nothing but again the symbolic of the symbolic. Token cut is decrease by 100 rupees. It is decrease 2 rupees one and it is decreased by 100 rupees. Token means it's just a token thing. I just want to show that I don't agree with this thing, is known as the token cut. Of course, the cut motion itself is symbolic, and within this symbolic we have this token cut which is symbolic of symbolic. Anyways, so this is the departmental standing committee system which was started in 93 and 94. So this departmental standing committee, they will discuss it, scrutinize it, no cut motion can be passed and no voting can take place, but their time is fixed. Parliament is going to decide that this much time has been allocated to departmental standing committee. That time cannot be extended. Otherwise, the committees, they are very much famous for extending the time frame. Then, once the parliament session resumes, maybe after 1 month or something, after this recess, when this parliament session resumes, first one is the vote on account is passed. The first thing is vote on account is passed. Here it was only tabled along with finance bill. It's not being passed. It is only tabled. And once it resumes, the vote on account is passed. And second thing is the individual demand for grants, which were discussed by the departmental standing committees. Now this individual department for grants, but ministry wise, they are being discussed and passed by the parliament. But again, the time duration, the maximum time allowed to parliament also is fixed, and that time is 26 days. So within these 26 days, parliament has to discuss this individual demand for grants. They have to pass this demand for grants. But suppose we have, just like we have discussed, we have 141 demand for grants. Out of this 141, they were able to discuss only 55 in 26 days. So the rest of the demand for grants will be clubbed together and they will be passed in the form of guillotine. So guillotine we already discussed in polity. So all these things will be clubbed together and passed through guillotine. Guillotine means just clubbing the remaining issues and passed. So once this individual demand for grants is passed, then a bill is being created and that bill is known as appropriation bill. So now appropriation bill is introduced, and after it being introduction, it is being passed. But what actually appropriation bill is, it constitutes two things. First thing we already discussed, that appropriation bill is nothing but the addition or submission of these individual demand for grants plus one other thing, and that thing is known as charged expenditure. So what is charged expenditure? So we have few constitutional positions like president, like salary of CAG, like salary pension of Supreme Court judges and all this. So they are charged on the constitution. Charged on the constitution means these things, the salary of all these constitutional bodies, they cannot be voted in the parliament. Otherwise what would happen? Suppose the role of Supreme Court is increasing. So maybe in comparison to the, we have three pillars of any democracy. We have executive, we have legislature and we have judiciary. Executive is nothing but the council of ministers. Legislature is nothing but the parliament. So suppose the judicial has taken some place of the legislature under the purview of judicial activism. So in that case, maybe in opposition the situation, whether it is hypothetical situation, but still a situation can come where the legislature decided that from tomorrow there will not be any salary of the Supreme Court judges. Very much possible. So under the charged expenditure, what is the provision? That some constitutional posts, whatever the post of these constitutional bodies, they cannot be discussed, they cannot be voted, but of course discussion can take place. This charged expenditure can be discussed. Discussion, yes. Voting cannot take place. So there is no voting on charged expenditure, but there can only be a discussion on the charged expenditure. So appropriation bill is nothing but it is individual demand for grants plus the discharged expenditure, appropriation bill is introduced, it is being passed, and the condition is the introduction of appropriation bill cannot be opposed. This you have to remember, that appropriation bill introduction cannot be opposed. And once the appropriation bill is passed, appropriation bill is nothing but the expenditure. So once the government is having this knowledge that this is my expenditure, accordingly government will pass the finance bill, because finance bill is related to the receipt part. So once appropriation bill is passed, the finance bill is passed, but finance bill is introduced before the appropriation bill is introduced. So see this thing, finance bill is introduced before appropriation bill. Sorry, once again, the finance bill is introduced before appropriation bill is introduced, but appropriation bill is passed before finance bill is passed. But there is one more condition, that once the finance bill has introduced, so the time duration between introduction of finance bill and the final passage of the finance bill, it cannot be more than 75 days. And because it is in table on the last day of February, so March, April, by mid of May, the budget is being passed. So finally, once the finance bill is passed, we can say the budget is passed. So this is what the process of budget making. This is one of the favorite question of interview. Any interview you can give, any UPSC, state PCS interview you can give, and this is the favorite question. Tell me the budget making process, how budget is being produced, how it is being passed. So this is what we have, the budget making process. And then we can discuss all these small things. What is the Consolidated Fund of India, what is Public Account Fund of India, what is finance bill, what is money bill. So appropriation bill is article 114, that is related to the expenditure part. So under this expenditure part, 114 expenditure, so union government accounts are being maintained by article 266 and 267. 266 is nothing but the Consolidated Fund of India, and we have the Public Account Fund of India, and 267 is nothing but the Contingency Fund of India. So CFI versus PF, so Consolidated Fund of India, all in detail these things must have been covered in polity. So CFI is nothing but, if you want to withdraw any money from CFI, Parliament approval is required. But in case of Public Account Fund, it is in the hands of executive. The Council of Ministers decides. Then what constitutes Consolidated Fund of India? It includes the normal taxes which are coming, plus if there is some loan taken by the government, plus the interest being received by the government, plus surcharge. All these things, they are a part of Consolidated Fund of India. Then what comes under Public Account Fund? It comes under National Small Saving Fund. Then you have this PF, plus you have some, maybe judiciary has said that this much amount of money you have to keep. So all those things that comes under Public Account Fund of India, plus we have cess. We'll discuss this difference between surcharge and cess in 2-3 minutes. So Consolidated Fund of India is nothing but a type of account being maintained by the government, and to withdraw even 1 rupee from CFI, you have to take permission of the Parliament. And Public Account Fund is in the hands of the executive, and such this NSSF, PF and all these things, such type of things, they are being part of Public Account Fund of India. And 267 is nothing but the Contingency Fund of India, which is in the hands of President and being maintained by Finance Secretary. So this Contingency Fund of India, the value is only 500 crore rupees. So 500 crore for contingency situation is in the hands of the President, and that type of account is known as Contingency Fund of India. Then we will discuss the difference between surcharge and cess. So surcharge and cess both are tax on tax. It means, suppose in the taxation chapter we will discuss in detail But both are tax on tax means, suppose your personal income tax is 10%. 10% of your net income or taxable income. So suppose your income is 100 rupees. So 110, what this 10% of 100 is 10 rupees. So your tax is, the tax liability is rupees 10, plus on this 10 rupees you have to pay this surcharge. So for example, there is a surcharge of 5%. So this will be 5% of tax. Tax in this case is rupees 10. So it is tax on tax. It is not applicable on full 100 rupees or your income. It is applicable only the tax part. So the tax part is 10% of 100, that means rupees 10. So 5% of rupees 10, that is 0.5. So 10 plus 0.5, it means 10 rupees and 50 paisa. Now cess will be levied. But what difference is, the surcharge is for the general purpose and cess is for the specific purpose. For example, we have education cess. So education cess, whatever the money government is getting, for example, the education cess is 3%. So this is 3% of 10.5 and this will be your final tax liability. So whatever this money is, this 3% of 10.5, the government has to use for that specific purpose. If this 3% is education cess, so government cannot use this money for any other purpose except this education. Just like recently launched that agriculture cess, that will be used for agriculture sector only. Swachh Bharat cess will be used for Swachh Bharat program only. Education cess can be used only for the education. And who takes care of this thing? That this money is not being diverted to some other sector. It is being done by the CAG. So it is the role of the CAG to cross check this whether the cess is being used properly or not. And in detail we will discuss later on surcharge, cess, direct tax, indirect tax and all these things. So this is what we have, the Consolidated Fund of India versus Public Account Fund of India. The next we have is, first we will discuss vote on account and then we will discuss finance bill and money bill. So we discuss that as per article 116 we have vote on account. So vote on account is nothing but the advance permission of roughly 60 days taken by the executive from the parliament. And then we have interim budget. So we have article 116 related to vote on account. And what is the article that is related to interim budget? The answer is no article. Nowhere in the constitution word like interim budget has been used. But it's very often it comes in the news that interim budget is nothing but the budget for last year of the present government. So suppose in 2014 a new government came. So 1st April 2014 to 31st of March 2015. Suppose a new government came in July 2014. So for the month of April, May and June, this interim budget will be passed. But constitutionally there is no difference between interim budget and normal budget. The same process will be used. But it is just unofficial we say that interim budget is nothing but the budget for the last year of the present government. Otherwise all this same budget making process is going to take place for this budget also. Suppose this is the budget which is being passed by the last Congress government and the new NDA government came and NDA government wants to pass a new budget for the same year. But because NDA government might came in July 2014, so the remaining maybe 9 months or 8 months, for 9 months only they want to enact the budget. So for these 3 months this is regarded as interim budget. But interim budget is nothing but a normal budget as per the procedure. In interim budget also there will be vote on account, because if the duration of interim budget is 3 months, but still you need vote on account. But because The normal budget will be lapsed on 31st of March of 2015. Of 2014. Afterwards, you need 60 days advance. So in last year, you will have interim budget as well as vote on account. And for all other years of the government, you can only have the vote on account. But interim budget as such is nowhere mentioned in the constitution. Just like 0R. Then we have one more topic that is known as finance bill and money bill. So money bill is nothing but Article 1110. Any bill will be regarded as money bill if it has provisions related to all these things. These things are, if you are withdrawing some funds, withdrawal of funds from Consolidated Fund of India or Public Account Fund of India. If you are depositing or anything which is related to imposition, remission, abolition, regulation and altering of taxes. So if there is any bill which is related to all these things, that bill will be regarded as money bill. And who finally decides whether this bill is money bill or not? The speaker decides. The Lok Sabha speaker is having the final say, and this, the final decision of speaker, cannot be even challenged by judiciary. It cannot be challenged. Say of the few opposition party, the members of opposition parties, they were saying that the passage of Aadhaar bill as money bill is an example of colorable legislation. It means the purpose of money bill is something different, but you have passed the Aadhaar bill as the money bill for the different purpose, because the final say whether this bill is money bill or not is being decided by the speaker, and this cannot be even challenged in the judiciary. So it is a legal loophole through which the government can enact the legislation if they don't have the majority in either of the house, most probably in Rajya Sabha only, of course. So these such type of legislations or acts, they are known as colorable legislation. So this is known as the money bill. And then we have Article 117, which is related to finance bill. So finance bill is nothing but, finance bill can be of type money bill, it can be of type finance bill 1, it can be of type finance bill 2. So can we say that all money bill are finance bill? But not vice versa. All finance bills are not money bills, but all money bills, they are regarded as finance bills. And then we have finance bill 1 and finance bill 2. Money bill is nothing but any bill which has the exclusive provisions of Article 110. It means whatever is mentioned in Article 110, if any bill which relates to only these things, then it will be considered as money bill. Finally, it will be decided by the speaker. And what are the other characteristics of money bill? The other characteristics is it can be tabled only in Lok Sabha, and that too on the recommendations of, that too after the recommendations of President. One more characteristic is it can be tabled only by minister. It means it cannot be a private member bill. It should be tabled only by the minister. Then we have the same, Rajya Sabha don't have much say. They can only suggest something, and it is the discretion of the Lok Sabha whether they want to accept the recommendations of the Rajya Sabha or they don't want to accept the recommendations of the Rajya Sabha. Next, the President can't reject money bill, but can keep it for assent. We have different types of veto, pocket veto and qualified veto and all these things. We will not go into detail. But president cannot reject a money bill, but of course they can keep this bill for the assent. So that is possible, but the president cannot reject the money bill. Next we have is, if this bill is failed or not passed, it means automatic resignation of the government. Automatically the government has to resign. So all these are the some major characteristics of money bill. And what we have in finance bill 1 is, finance bill 1 will be having provisions of article 110 plus something extra. It means it is not only exclusive to article 110, it is having provisions of 110 plus something extra. Just like if you have Central Road Fund Act, so it is related to imposition of taxes, cess and all this thing, plus it will be not lapsable. So this not lapsable component is nowhere mentioned in article 110. So it means this is having 110 plus something else. So such type of finance bill, they are known as finance bill 1. And how they are different from this money bill? Finance bill 1 is same as money bill unless and until it is passed by the Lok Sabha. It means this provision will be applicable, then we have this provision will be applicable, but we have few more things, just like no joint sitting, all these things will not be applicable. So once a bill is passed by Lok Sabha, it becomes an ordinary bill, but these things will be applicable. Finance bill 1 can only be introduced in Lok Sabha, and that's too after the recommendations of the president. Similarly, finance bill 1 can only be tabled by a minister, cannot be a private member bill. And then we have finance bill 2. Finance bill 2 is like an ordinary bill, except, and what constitutes finance bill 2? It constitutes a bill under which the provisions are related to withdrawal of funds from Consolidated Fund of India. The example can be, suppose you want to decide the emoluments of the president. So some act will be there, some bill will be there. So that act or bill will be regarded as finance bill 2. It is very much same to the ordinary bill, except that president recommendation is must. First you have to take the recommendations of the president. So the only difference between finance bill 2 and ordinary bill is this one. The difference between finance bill 1 and money bill is this first and second thing can be tabled only in Lok Sabha. Recommendations of the president is must. It can only be tabled by the minister. And money bill, these are the specifications. So this is the difference between finance bill and money bill. You can expect some questions from this finance bill and money bill because it is in news due to this Aadhaar and all other things. So this is what the basics of, or how the budget making process of the budget that is there in India. Afterwards we will discuss the static concept of budget, how budget, the structures, whether this disinvestment comes under revenue or this comes under capital. So that structure, revenue versus capital, development versus non-development, all these things we will discuss in next lecture. Thanks a lot.